people in. Cool. We can start letting people in now. Morning, everyone. We'll start in just a couple of minutes. Just let everybody gather. Monday morning. Morning all, we'll start in a couple of minutes. So you've got time to just grab a coffee or a glass of water or something before we start. As for those joining, we'll start in a couple of minutes just to let everybody get into the technology. Do grab a glass of water or a coffee if you want to. Morning all, we'll start in 1 minute. Just letting everyone gather into the session. Okay, good morning, everyone. My name's Gavin Starks. I'm the founder of Icebreaker One, and today we're going to be going through our program here on SERI, a standard for environmental risk and insurance. But to start us off, I'm going to just ask one of my colleagues to start our first poll. We'd like to know who's in the room with us today, and then we'll get started. So this first poll also scrolls down. So if there's an option that fits there. Okay, we'll just leave that poll running while I do a bit of the introductions here. As I mentioned, my name's Gavin Starks, and if we go to the next slide, please, I'd like to introduce Harriet. Say hello.
Hi everyone, my name is Harriet Richards and I work in the COP26 Private Finance Hub in a team that supports Mark Carney in his roles as UK Finance Advisor to the UK Prime Minister, head of COP26 and UN Special Envoy on climate action. So yeah, really excited to join the panel today.
Thank you. And Wendy?
Hi, I'm Wendy Chris. I'm an actuary at Barnett Waddingham. I'm a consultant to the general insurance industry.
Super. And Dominic?
Hi there, I'm Don Probin from Aon. I work in Aon's management consulting business unit, which is called InPoint. I work with my Aon colleagues as well as our insurance clients on strategic climate change initiatives and consulting engagements, all focused on helping the insurance sector to identify and capture opportunities for growth, innovation, and better risk mitigation in the climate and ESG space.
Thank you. And Vici?
Good morning, all. I am Vici. I work as a researcher and the co-chair for the Systems and Standards Working Group for SIRI here at Icebreaker One. Yeah, that's it.
Thanks very much. So if we end that first poll now. So we've got a number of insurers with us. We've got some risk modelers, and what I'd say for the people who've put in something else, can you add, feel free to add any additional information into the chat at the side. So just by way of introduction, so if we go to the next slide. Icebreaker One, I set up a couple of years ago now. We've been active for about a year, and we're trying to make data work harder to deliver net zero and empower decision makers to measure, mandate and act upon the data flows that enable net zero. SERI is our founding program. If we go to the next slide, and what we've been trying to achieve with the program is to understand how better access to data can lead to different interventions in the market, whether that's in terms of policy instruments, whether that's in terms of specific product design. And we've brought together a number of different partners over the last year to explore what would a climate-ready financial product look like. We've engaged with hundreds of different experts across the sector and to really trying to understand here what's the shared data infrastructure for the insurance sector that could help us bring this to life. And rather than talking in the abstract, the program is very much an applied research program to say what product could we design with our partners and test in the marketplace to really illustrate this. I think a lot of initiatives set off with very good intent, but really struggle when it gets to the kind of sharp end of what are we going to build and what does that mean, and does it create the change that we want to see. So what I'd like to do is pass over to Vici, who will walk us through one of the many product ideas that have come out of the program. I should say that this has been a very intense process over the last year, especially with lockdown and everybody working remotely. But I'd say at peak, we were probably cycling through product ideas and doing product sprints once a week. So there's been dozens and dozens of different ideas put through the ringer here, and Vici will lead us through one of the prime candidates that's come out of that. Over to you, Vici.
Thanks, Gavin. Good morning, everyone. So, a reminder, I'm Vici. I am a researcher here. I focus on researching levers of change in complex and dynamic stakeholder environments. Particularly, we're trying to look at how data can enable and enhance climate change objectives so that we could drive towards our net zero economy and our overall targets. So I've been chairing the Systems and Standards Working Group, which is one of two advisory groups, of the SERI program. One of which is the Commercialization and User Needs Advisory Group, which deals with the what and the why, and the Systems and Standards Group, which is basically the how. So moving on to the next slide, I've put together a few slides that we've used in our advisory group discussions, and I wanted to just summarize from the Commercialization and User Needs Advisory Group. We settled on a use case that centers around the insurance, commercial real estate, property insurance marketplace. What we concluded was that we needed to understand what exactly a climate-ready insurance product is, and we came to the conclusion that a climate-ready insurance product is possible through the integration of not just resilience measures, which is currently included, but also mitigation measures need to be considered in the insurance process and the various different value chains. So that we can fulfill our goal of incentivizing net zero behaviors through products. So as we explored this, we obviously came head to head with some big challenges in the insurance industry, centered around data being scattered, entirely opaque. There's no transparency in the data value chain, closed off, and really differs widely across not just insurers to insurers, but other insurance participants, brokers, reinsurers, ILS investors, everything else. So we moving on to slide number 8. We did a lot of research, a lot of mapping activities. We looked at the value chains of commercial buildings and stakeholders and data involved. We explored this concept of a climate-ready building passport, which is an application built on the sort of data that can be made available. And finally, we looked at how these proof of concept governance frameworks from open banking and open energy, the elements of these governance frameworks, and how they can enable smooth and frictionless data sharing for the insurance marketplace and the wider participants involved. So finally, my final slide is slide number 11, which is our vision. Our vision really is to establish this sharing governance framework that enables insurance participants and across industries access to relevant data, mitigation measures, and various different adaptation and resilience ways of measuring our net zero outcomes. Through this governance framework, we've mapped a whole load of complicated stakeholders across, which you can kind of see behind the blobs in this graphic. And we've presented a roadmap to get to this sharing governance framework. We've done a lot of work on defining this climate-ready building passport application, which Don will speak about more. But that's really to give you an overall picture of the work streams that we've had, and legal and governance work stream as well has put forward some recommendations that you can find published open on our website. And yes, it's been a fantastic journey, a really tough journey. And I'm sure a lot of you insurance participants here understand and resonate with quite a lot of the challenges that we faced. But overall, I think we've attained our goal. Creating a climate-ready insurance product is certainly possible, and doing it through a governance framework is the way to go.
Thank you, Vici. That's great. So I think one of the reflections here is the degrees of complexity here in trying to work out what data exists, what the data value chain is, and who the different actors are in the ecosystem. I'd like to pass on now to Harriet to take us through her introduction. Thank you.
Thanks, Gavin. Yeah, I guess I can set the scene and step back a bit more and speak more at a high level on the insurance industry ahead of COP26. So just to sort of set the scene, in 2015, Mark Carney really put climate and the net zero transition on the agenda, specifically for the insurance sector through his 2015 Tragedy of Horizons speech at Lloyd's of London. And 6 years on, the insurance industry, just like this, this research project has shown that there's been a lot of progress, but there's still a lot more to do ahead of COP26 and in November. And to think about insurers, they're very unique in the financial system, given the fact that on one hand, they can be very exposed to the physical risks of climate change through providing insurance covers to areas of the world where there's increasing wildfires and flooding. But on the other hand, through their investments, they're some of the largest asset owners in the world. So where they put their money can have a real impact on the net zero transition. So I'll just touch on two initiatives that through our team and Mark Carney's sort of convening influence, we're trying to support and promote ahead of COP26. And the first is on the transition side. So as I mentioned, insurers are some of the largest asset owners, and we've seen work that they've publicly committed to align their investments with net zero. But to really create a consistent view and look across that insurer's whole of their balance sheet, we need to think about how they can align their underwriting activities with the net zero transition, and also how to bring in brokers and marketplaces to bring a sort of whole holistic view. And through the UN's Principles for Sustainable Insurance, there's a lot of work to develop the Net Zero Insurance Alliance, which will bring together this whole value chain to think about how insurance and net zero come together. But then on the other hand, it's not just about the transition. We're already facing increasing physical climate impacts, and we must build resilience and protect the communities that are most vulnerable. And while there's good sort of data and metrics on the mitigation side through measuring carbon emissions, there's a clear sort of lack of metrics and to size the physical risks of climate change and how to build resilience, especially in the most vulnerable countries. So working closely with insurers through the Insurance Development Forum and academics and public bodies to develop an open access data platform called the Global Resilience Index, which will help to fill this gap and create some standardized metrics to be able to enhance resilience. So they're the two kind of themes across both transition and mitigate and adaptation and resilience. And there's been good progress to be made, and insurers have such a wealth of expertise, especially in modeling physical risks, that they're just crucial to this agenda, and really looking forward to November, where the insurance industry can showcase the progress that it's made. Thank you.
Thank you very much. And we'll come back to some of those governance questions in the discussion. Wendy.
Hi, as I said earlier, I'm Wendy Chris. I'm an actuary at Barnett Waddingham. So I'm a member of the Institute and Faculty of Actuaries, and I sit on the Sustainability Board of the Institute and Faculty. Can I have the next slide, please? So talking about regulation, there was the statement on the left was produced by the PRA in April 2019, and this was kind of the kickoff for the insurance industry of really thinking about climate change. And the picture on the right there is the front page of a report that I co-authored, and we based that report on a survey that we did. We asked quite a few questions about the impact of that statement on the left. And what we found was that most people said the impact of that statement was large. So it sort of showed that regulation does have a big impact on what insurers do and on the industry. So it's really important that we get the regulation right. Next slide, please. So yeah, I was asked to talk a little bit about what I thought about the SERI programme and my sort of views from an actuarial point of view. So first of all, I was amazed at the huge range of roles that there are of different people doing different jobs and everything that they were doing. It was so interesting to meet all these different people. And I think that's Icebreaker, that's what they do, isn't it? They introduce everyone, and I think it's certainly expanded my horizons. And I think it's also shown me how complex the insurance industry is. Like, having worked in the industry for 20 years, it doesn't seem complex to me anymore. But when I speak to people who aren't so close to it, I suddenly realize actually it is really complicated what's happening here. It's not an easy thing to get to a net zero in the insurance industry. And also it's sort of brought home the inconsistencies that we have in our data. It's really important that we do get some consistency there, but I think it's going to be a very long road to get us there.
Great, thanks, Wendy. And that's questions around data quality, consistency, and complexity. Again, we're going to be coming back to. But before we jump into the discussion, Dom, do you want to take us forward?
Yeah, thanks, Gavin. So I thought I'd just sort of, coming to this session, I thought I'd reflect on the achievements of the Building Passport Working Group that Vichy's sort of talked over earlier, and I kind of recognise the sentiments of both Vichy and Wendy just now, really, about how complex and complicated the insurance value chain is, and certainly can be from a data flow perspective. So the fact that this group decided to tackle that challenge and really made some progress in creating a view of it, especially in the context of climate change, which is an even more complicated topic, can be seen as a really big achievement. I think the goal of the group was to create a concept which will enable those involved in managing the built environment to articulate their climate position completely and consistently, with the goal of getting better solutions from the insurance sector in return. And the output is a design of a mechanism which that sector and the insurance sector can use to have a constructive dialogue around this topic. That it reflects all of the data related to physical and transition risk dimensions, and through that framework, insight can be provided to the insurance sector, which they need to understand so they can undertake specific climate change analysis, and also work through that activity related to reporting and to disclosure that Wendy outlined, and also, of course, risk assessment, which is the modus operandi and pricing, and of course to develop the much needed products. So the group got to a great point where I think we can now, the insurance sector can now start to explore the advantages that are there for brokers and insurers as they consider how to utilise the building passport and the commercial and operational benefit that a data framework like that can deliver.
Great, thank you, Dom. We'd like to keep things as interactive as possible, so if we launch our second poll now, and this question, which will pop up in a second. Hopefully. There we go. So what I'd like to hear from our audience today are, what are the biggest blockers to sharing data in your specific area of work? I think one of the things that was really highlighted to me, and as Harriet and Wendy and Dom have highlighted, the complexity around this area is not going to decrease. And as more and more data comes to market across these different areas, if we look at the building passport data elements, it covered everything from building information management, or BIM data, through to energy usage, water usage, occupancy, as well as all the usual kind of flood, wind type of parameters. But the number of stakeholders was also very substantial, ranging from the building asset owners right the way through the investment chain to the investors, the CAP modelers, and so on. So what we arrive at here is a many-to-many ecosystem of data. And layer on top of that, as Harriet was mentioning, the need for greater and greater reporting. You need standards. And so our experience has been very much, and my experience in running the Open Data Institute and co-chairing the development of the Open Banking Standard, is there's a natural tendency when people want to standardize something is to put everything in one place, or to build a portal or some kind of master database. And that is not an incorrect outcome, but the route to get there, we feel pretty strongly, is that there's a increasing need for the data that each individual organization holds, or each individual asset has about itself, needs to go to multiple places. And so there's a lot of friction in that system, a lot of legal friction, a lot of commercial friction in getting the really useful data to flow from people who have got the data to people who want to use it. And in some cases that needs to be paid for. In other cases, there might be a kind of value, a different kind of value exchange. And I can see in the poll, if we end that now, that lack of data or lack of data systems is the number one challenge that people are facing, and the incentives to share data being another one. I think this the commercial imperatives here. What are we actually getting back as an organization if we share our information? This is a collective action challenge. And so the reason that we've arrived at a data governance solution here that enables the sharing of data without the centralization of data, and Vicci's presentation had a decentralized solution. So the data stays where it is and provides access to those who need it within a common framework. So that's the kind of outline that we've been working to within this program. I'd like to come to the panel now and maybe just expand a little bit, Harriet, if you could give us a sense of this idea of centralized information versus decentralized. And as you look at the reporting landscape, how are we going to enable this level of data sharing to scale? What do you see as the big challenges there?
So I guess I can touch on the reporting. So the Task Force for Climate-Related Financial Disclosure, the recommendations around that in terms of getting the financial industry and non-financial industry disclosing their exposure to climate risks. And as we see the pathways to mandatory through the government's 2025 mandatory disclosure timeline, we're going to see reporting really becoming the mainstream, and the importance of disclosing these risks to show how exposed different industries and the insurance industry is to managing these risks. And also as we go forward, the IFRS is developing the Sustainability Standard Board to think about how to embed this on a global scale. So that's on the reporting side, and on decentralized and centralized data sharing. I think the importance as well through the Insurance Development Forum and your work and their development to develop the Global Resilience Index is the need for governments and public bodies to get on board as well. So the development of public-private partnerships to ensure that the insurance sector has this wealth of data out there, but to really, as you mentioned, it's a common access and a collective access problem, that to get everyone on board, we need the government and we need public bodies to support the process. So
what's the incentive structure then? If I press you on that a bit, is this going to be a regulated kind of forcing function through an existing regulator, or what are the mechanisms here to compel action?
So I think it's challenging in terms of mandating that side of regulation. Just, I mean, yeah, it's difficult. It's difficult to know. I think the private sector has sort of been leading the way in terms of developing different standards, and such as TCFD and your work as well. But in order to get sort of the whole, bring the laggards up to the leaders, we do need a sort of regulatory push to get everyone on board.
And Wendy, what do you see as the blockers and challenges for industry to engage?
Well, I think in insurance, data is valuable, very valuable. If you have the better data, you'll charge a more realistic price, which means that you'll get better returns. So insurers are very protective of their data, and they don't necessarily want to share it with their competitors. But I think it is something that we do need to start at least thinking about. But I think the fact that the data is so inconsistent is a real blocker. So even within the same insurance company, you'll have different definitions of what you might think of as very simple terms. So what you think of as gross and net, what net of what? So and some companies have a net or a net. So I think just having a language that we can all understand in exactly the same way, I think that would be a good starting point before we even start thinking about sharing data. We have to understand what the data is.
Great. And Dom, do you echo that, or are there other blockers in there as well?
No, I really agree with what Wendy said about data. I think data is probably one of the most important factors as well. In terms of incentives, to Harriet's point about regulation in response to your question, there are other incentives as well here for insurers, and obviously the world is moving to a sort of a kind of stakeholder model really of functioning, and capital providers are so sensitive to ESG and climate risk considerations, far ahead of the insurance sector, that I think that's probably going to be one of the most powerful incentives for insurance companies. ESG hungry capital is really kind of queuing up to enter the insurance market if we can get our house in order and show the impact that we are having and can have. So I think the motivations of capital providers and other stakeholders is important as an incentive. But equally, if you ask them, they'd probably tell you that data is the most important thing as well, and understanding the underlying risk that they are taking on by providing capacity or investing in an insurance company would be the most important thing for them.
Great. I'm going to take us to our next poll now, and then I'm going to come to Vici to be more disruptive to our conversation today. So if we could start the next poll. This is going to be, what do you think are the most important factors that could help the insurance sector play a role in the UK's commitment to the Paris Agreement? So if we can have that poll up now. And as we're going through this, please feel free to ask any questions or make any comments in the group chat. And we will take them to the panel. 1 second, I'll just start that poll now. So you'll see the answers here also scroll down to a degree. So as people are wading into that poll, I'd like to tee up the next question for Vici here. One of the objectives that we had for the SERI program was to try and see if there were some really substantial changes that could be applied to the way insurance can affect the net zero targets, whether there may be new business models emergent in there, and the fact that we've heard from many people that there's an abundance of data, apparently. There's an abundance of capital looking to be deployed, as Dom has just flagged up. But we've yet to find anywhere where it's really connected to what I would call demonstrable net zero. How can we either prove that what we're investing in is going to stop climate change in the first place, or that it's really going to radically reduce the risk of its impact on our world. So just we're finishing off that poll now. The number one response here is mandatory climate-related financial disclosures and regulatory intervention, I think, is another significant one there. But Vici.
Thanks, Kevin. So there's a lot there. I think it basically summarizes the challenges in this SIRI program. I think picking up on Wendy's point, and especially as a researcher and convening these stakeholder engagement activities, transparency is a big issue with the insurance industry. It is the nature of the industry, as Wendy has said, it still runs on this knowledge is power aspect. Brokers are an incredibly important stakeholder in, for example, commercial insurance. And getting transparency and insight into the data flows and the data systems at play, or the different systems at play, is very hard. It's very hard to tie the incentives needed to the overall goal of climate change and how to measure that and how to mitigate that. Now we've seen various parts of the value chain. So you've got the CAT modeling and how better data for CAT modeling can improve CAT risk sort of insights. We also know that there's the other side of the insurance value chain, which is the underwriting and the sort of businesses that are actually insured on their books. So there are various parts of the value chain that we can look into further and try and quantify and understand how the insurance marketplace can actually move towards a net zero outcome. Specifically, I think throughout this program, it's pretty clear that there is uncertainty and no sort of education around data sharing systems and how data can be shared securely. So there's this lack of understanding that being part of a sharing data ecosystem would mean that you'd have to give up your IP and your sort of knowledge on and your your business USP, which is not the case. I would like to point to the circumstances that enabled open banking. So that's between the customer and the bank, and how there was resistance to open up that value chain as well. And that's just a small value chain, but look at the sort of things that have come from that. And open energy also has a head start on SIRI in that the regulator, Ofgem, has implemented these data and digitalization strategies. So all members of the energy ecosystem in the UK are really looking to how to open up their data. So and across the data spectrum. So that's not just open data, it's shared data as well, which is usually the sort of closed data that can be made more efficient and smoother for sharing. And then you've got the closed data, and we really need engagement from the insurance industry and the different sectors to understand that spectrum, so then we can start sharing better to work towards our collective net zero actions.
Great. And I'd like to come back to Dom and Wendy here as well, of like, is there an argument here to change the part of the business model to an investment model, so to effectively help avoid the problem in the first place? And what would it take here to help drive investment towards, for example, net zero transports, as Esme has just put in the chat there? Dom.
So it's an interesting, a very interesting way of looking at the challenge, really. I think there's definitely scope for, and in fact, there'll be a necessity for insurance companies to look at risk differently. As we move to net zero, ultimately, some of the implications of physical risk, and also as insurance companies, perhaps drive more quickly than others to reduce their exposure to carbon intensive activity, there will be risks that come out of the conventional insurance business model of risk transfer. And so we need to think about other mechanisms by which those policyholders, those assets and those communities can continue to be protected, either through, services, effective services, or through partnerships with the public sector, so that, more risks can be pooled and then the insurance sector can sort of attach at a different point. Whatever those look like, they are all reliant upon data, and the insurance sector is on a journey here, and it's a path that we've trod before, in the sense that it used to be the case that terrorism wasn't particularly insurable and cyber risk wasn't insurable, and these journeys all start at the same point, which is really that the insurance sector needs to gain a better understanding of these risks, and start by ingesting that data in a structured way. And over time, I think those solutions and those business models will emerge. Of course, the other dependency upon all of that is the agility and the level of innovation that can take place within insurance companies. And again, just like data, it's another area of I guess what you call a development point for the sector. Great.
And Wendy?
Yeah, I agree with Dom about data and development of systems. I think there's a lot of mergers and acquisitions activity in insurance, which means that you have lots of different systems within the same company, which makes it very difficult, even within the same company, to sort of get that consistency and be able to move forward, because you're dealing with so much legacy. I think that's a sort of big thing within the insurance industry as well, because we deal with the past. Like it's about what's happened before a lot of the time. That's where we have to start, and that's why it takes a long time for the insurance industry to react. Because like Dom said, we need that data, but we don't have it. We don't have the experience. So what do we do? So I think it's, as actuaries, what we do is we look around and try and look for similar things. So for example, like Dom said, we could use the experience that we had with cyber insurance. I think actually COVID has been really good. I had to get the COVID in. COVID's been really good at helping insurers innovate. And I think the experience that we've had with COVID will definitely help with developing systems to deal with climate change.
That's super interesting. Thank you. I think one comment there I'd reflect on is even sharing information inside organizations is a massive challenge. And that's certainly been my experience over the last 20 years of working with organizations to help them understand how to either open up their data or just make it more accessible through a shared data infrastructure. I think more broadly, one of the things that struck me, having had very little exposure to the insurance sector prior to our engagement with SERI, is the degree of opacity in insurance for me was greater than the degree of opacity in banking. And banking was pretty opaque. So I think this question has also been raised by Lindsay on the chat. The clarity of who insures what would be a good step. If insurance companies had to disclose which specific fossil fuel projects and companies they insure, it could provide additional clarity. And I think this comes back to a broader question. I'll come back to Harriet as well. One of the big challenges that we can see coming is a proliferation of standards as well. It's a great thing about standards. As soon as you have 5, you have then 1 more to try and unify them all, and then you have 6 standards and so on as it goes. We've heard that aside from the EU taxonomy to describe the different climate scenarios, that there are another 40 plus taxonomies in development by different countries around the world, and they're not particularly compatible. So with the imperative here of we don't have that much time, because physics tends not to care about policy or business, how are we going to inject forcing functions into the systems here to really make a drive towards action? We've got some quite rapid legally binding targets in the UK and other countries around the world, but what's really going to move the needle here, do you think? Let's go to Harriet first.
Thanks, Gavin. Yeah, really good question. I think it's at the moment there's a lot of voluntary action through lots of different net zero alliances, such as the Net Zero Asset Owners Alliance, which a number of insurers are involved in, where they publicly commit to net zero on their investment side. But the development of the Net Zero Insurance Alliance and how to think about how you can align your underwriting activities with the net zero transition. And again, lots of different alliances, which bring similarities of what you were saying. But we recently launched the Glasgow Financial Alliance for Net Zero, which brings together, is an umbrella above each of these different alliances that brings together the whole of the financial committed to net zero, to really give the financial sector one voice to speak to government about these issues, but also to NGOs and public bodies and society. And then from there, I think the key to really give the push across the whole system is the role of the regulator. So as Wendy mentioned, the supervisory statement that came out from the Bank of England to get banks and insurers embedding climate risks, bringing it from corporate sustainability and bringing it into the CEO and C-suite level, to get these decisions embedded right at the top of management. And then one other thing on the regulatory side is alongside supervisory action and expectations, but also thinking about how this can be embedded into capital requirements, but also the role of climate stress testing, the Bank of England's recent announcement of their climate stress test, to think about how, when we're modelling these risks, how each of these businesses across banks and insurers, how exposed they will be and how resilient, and assess their resilience to these risks going forward. So I think there's both a voluntary action that the sector can take, but I think also, action from the regulator is already happening, and it will only increase to happen to get this really, climate risk management mainstreamed into financial analysis.
Thank you. That's very helpful. We've got about 7 or 8 minutes left of this session, and I really want to try and get us all thinking about what's the one big intervention that we'd like to make or like to see happen. So if we can launch the last poll here. I think just to help frame this, there's a few different pieces that are coming together in parallel that are not yet connected, that could be connected, and connecting them would accelerate all of our work. And there's quite a lot of disruption in the way that they could come together as well, which I imagine will be quite terrifying to some of the existing businesses. So one of the things that is different to 5 years ago is the sheer volume and accessibility and potential accessibility of Earth observation data, of sensor information, of the fact that we've pretty much instrumented a lot of the world. We've also not instrumented a lot of the world quite critically as well, and that's its own presents its own challenges in terms of equitability. So there's a component here of new data coming to market from sources that are not where we used to get them from as a sector. And that will be disruptive. We've seen that in every other sector that's been impacted by the web, is that there are other organizations out there who almost produce some really useful information as a side effect to their core business. And that creates a kind of ripple effect through the markets. That's one component. The second component is we actually have a blueprint for data sharing that works at industry-wide scale. And that's been pioneered in the UK through open banking, and that applies to the whole market. It's regulated through the Financial Conduct Authority, and all of the banks have to be interoperable. And because they all have to be interoperable, all of the fintech companies, and there's 500 or 600 other companies, can plug into that same ecosystem and start innovating. And they become not just users of the data, but providers of data back into that whole system. So there's a whole data ecosystems development and innovation process that happens around that. And the work that we pushed forward with the FCA to explore how might open banking work for other financial categories such as insurance, investments, pensions, and so on, is also kind of in flight, but over there. It's not joined up yet with the the kind of climate agenda. And I think here, from my perspective, we're kind of sitting at this sort of nexus of these different pieces coming together. So when we look at those potential disruptors all kind of colliding, if you like, what's the biggest challenge that's going to come out of that, and what's the biggest opportunity? Because I think there's a vast amount of opportunity in here for invention and product innovation and so on. The poll response there was pointing very much towards mandatory climate-related financial disclosures. And I'd say that's another lever of change. You know, as people start forcing this information out into the market, it's going to have a ripple effect on lots of different sectors as well. That's a lot of different pieces to try and get everybody's heads wrapped around. But, you know, what are the biggest opportunities and the biggest challenges within that? I'll come to Dom first.
Well, I mean, I agree with you that the you know, the banking sector, the whole open banking initiative is a great model that, you know, aspirationally the insurance sector should be thinking about replicating. Now, I mean, for the most challenging risks that come into the insurance space, the processes and the product solutions are more esoteric. So there is obviously a challenge there. But I think the use of APIs and consistent data sharing is a challenge that the insurance sector recognizes and is trying to make progress towards through the Lloyd's blueprint and by, you know, initiatives that exist in individual companies. Now, there are lots of technological and operational constraints to that, but it's a task that I think the sector is committed to taking on. Now, what I'm hoping is that from a climate change perspective, the things that you've mentioned, Gavin, be it around data standards, but also mandatory disclosure, particularly TCFD, these are going to be accelerating factors in the whole operational change. I think they're going to really crystallize the challenge that the insurance sector faces and incentivize them to move a bit faster. Because, you know, what we can't afford to do is make a misstep, you know, like we have in the past, by not ingesting the right data to generate the metrics and KPIs that we need for transparent disclosure, and we need for you know, our capital providers, and also overall for the whole reputation of the industry, including our ability to innovate products and provide solutions to our policyholder base.
Absolutely. I'd like to come Vici, Wendy, then Harriet, and then I'll close us out. So Vici.
Yeah, I actually need to take a step back. Learning about how open banking and open energy are really changing things, I actually think that the big intervention would be alignment around data policies and data use and data sharing. There's a lot of work already done with the open banking ecosystem, especially with open energy, which is, I would argue, more similar to insurance because of the different stakeholders involved, the value associated with the data and their function in the value chain. So I think as we move towards sort of open finance, open investments, open energy, open insurance, I think it's going to come down to how these systems integrate with each other. And I think the data sharing model that we have been exploring is key to that, is key to interoperability, really. So I'm partial to the data side of intervention.
Great, thanks, Vici. Wendy.
Yeah, I think actually there's a lot that can be done by us as insurance consumers. I think we can vote with our feet and purchase insurance from companies that are working towards net zero, that have got that systems already, and they've got good disclosures. And I think building up pressure from the stakeholders, from society, and increasing the reputational risk for insurers that don't do this could be a good way of sort of pushing insurers to really do better. And in terms of opportunities, I think there's a lot of transition projects that are happening, and insurers, we can create products to ensure all of that transition activity that's happening around the world. And I think creating those products that people want to ensure those projects is a great opportunity for the insurance industry. But what I'd really like to see is the policy wordings to be consistent to avoid the issues that we've had with COVID and those business interruption claims, because this is something that is a real risk in the future, what's covered and what's not. But if we can get that clear from the start, I think that will help with the reputational risk in the future for the insurance industry as well.
Thank you. And is it just a reputational risk, or is it a really material risk of stranded assets? And
oh yeah,
are we approaching a Minsky moment within the insurance sector and so on, which takes us neatly to Harriet as well. Harriet, what's your view here?
Thank you. Yeah, so I think on the opportunities, well, almost the power of the financial sector, to remove insurance cover for specific sectors, or think about how they align to net zero. If a project can't get insurance, then it can't go ahead. So it's really, they have such a powerful lever, and trying to map that across to think about the just transition as well. So we can't just escape oil and gas. We need to think about how these businesses transition over time. So thinking about how to tie insurance to the credibility of a firm's transition plan could be one really useful aspect. But then on the challenges side and insurance and net zero, I think more work needs to be done on how to actually measure this. So TCFD mandatory disclosures coming, but really how to think of the metrics to measure the insured emissions. So a work's been done on the banking side to map the scope 3 emissions, the lending and the emissions within that. But think about that on the insurance side, like that's really new and nascent, and more work needs to be done to create standardized metrics to be able to measure progress along the transition.
And certainly scope 3 is an absolute minefield when it comes to data sharing. One final question for you, Harriet, as well as you've been talking a little bit about the national and supranational policy instruments, but how is this going to be utilized at the local level with local authorities? And a lot of people are sort of making the decisions at the ground level here. How can we start to see and facilitate better action at the local level?
Do you mean in terms of insurance businesses?
Yeah, well, in terms of the incentives to insurers to enable more rapid action at the local level, whether it's de-risking low carbon technologies, or whether it's enabling people to make better investment decisions at that local level.
Yeah, I think, well, there's one side you've got the regulatory push, but also the public society push, the reputational risk that Wendy mentioned, but also just the fact that you mentioned the stranded asset side, but it's just the biggest commercial opportunity of our lifetime, climate change, like trying to move along to net zero. On one hand, there's huge risks, but for moving along the transition to net zero, there's a massive opportunity for all firms. And if you're not part of the solution, you're part of the problem. And really trying to embed that right at the top of senior management and CEOs to really get that on their mindset. I think that will drive a big change.
Great, thank you very much. Well, I'm just going to wrap up now. So thanks to everybody for participating today. At Icebreaker, we are committed to helping to bridge these data gaps between finance and climate change, and make data work harder to deliver net zero. A lot of the challenges that have been highlighted today, we're building the operational components of to enable and facilitate data sharing in a trusted and secure way that addresses all of the commercial and policy issues. If you'd like to learn more, I've just added a link to our slides in the chat here, and please do get in touch if you'd like to continue the conversation. Thank you to our speakers today, and I hope to see you again soon.